The SGX Nifty this morning may be indicating a bit of a tempered start. Tempered actually is how we were yesterday as well, to be fair. So consolidated a little bit around that 18,600 print. Still within kissing distance of that all-time peak, and I say that because we are only around 2% away from that mark. So it's really a matter of time that we would actually reach that level. Having said that, yesterday we did see some resistance around that 18,600 level. IT, PSU banks, FMCG, they closed in the red, but it was autos which actually were the ones which were leading the charge. And within the broader markets, it was defense stocks which were abuzz on strong order intake as well. And some days of consolidation is really not bad. It's only healthy.
You know, in last 6 days, and let's look at the 6-day graph here. We'll go back to that graph. Markets have simply marked time. Now, you may say it's a range of about 200 points. In last 6 days, what we've done is that we've just moved in a 600-point range. So it's like saying that the bulls are refueling the tank before they take the giant leap forward. What makes me confident and perhaps gives me optimism, and the reason why I have a constructive view is purely not because of FI liquidity. I think that turn in liquidity is something which markets are already discounting. What gives me reasonable amount of confidence and also a positive view is because globally things are looking strong. Apple stock last evening hit a new high. Nasdaq has made a roaring comeback. Nvidia is now $1 trillion company. So globally also there is a moment of risk on, which clearly will help the markets on the margin. For Indian markets to stay high and make new highs, I think you need a lot of global support. You cannot do that in isolation. And I think that frankly is a new dimension which we must explore. Up until now in the month of April and May, the theme was FIs are back. India is the only story in the town, and India will get disproportionate amount of flows because money is rotating back from China. But I guess there is a global element to it, which is that globally things are looking up, and maybe selectively, maybe it's not S&P, maybe it is tech, maybe it is big five, but that there is an element of risk on, especially in equities and tech stocks, which I think will help the stocks on the margin.
Okay, yes, indeed, need that little bit of a global support as well. That is critical for our markets to move higher. But let's move on to a sector then and discuss the prospects of the Indian defense sector. And it's critical because India and the United States have just recently concluded a roadmap for the defense industry cooperation for the next few years. In fact, the two countries have said that there's going to be a landmark move that will help to bolster India's manufacturing ambitions. You will have the US as well that will deepen their ties with India. They're talking about stronger military-to-military technology ties, and that is key to counterweight China's dominance in the region. And Nikunj, defense as a space as well, if you take a look at the historical averages and the kind of move that we've seen, it has been in a sweet spot.
I mean, it's in a bull run. Sweet spot is an understatement. Why defense stocks are in a bull run? You must understand first, got to take the clock back. What happened immediately after the COVID? The government's whole attempt towards making India Atmanirbhar ties in beautifully with the defense story. India has been one of the largest importer of defense, of defense equipment, plus in terms of the ships and the planes in the world. The entire sector has seen what could be called as a big change, and that's largely centered around the fact that Indian manufacturing in defense has got a leg up after the government's support. PLIs were import and import restrictions they came in. This is a sector which up until now was dominated by PSUs, which were not very efficient. But there is a complete change in the way how PSUs are now conducting themselves, how they've adopted to technology, and how the fact that the government new policies are really benefiting some of the defense companies. So I'm not saying anything new. But at the current juncture, we must realize that after this stellar bull run in some of the defense stocks, are they likely to outperform, or they can best be market performers? My sense is that in the near term, defense stocks at best could be market performers. They are unlikely to be market outperformers. Why am I saying that? Because while the nuts and the bolts of the sector has changed, there is a change in the way how the landscape of the defense sector in India will evolve. You must realize that in the defense sector, the order book will always look very bulky at the start of the cycle, but these are long gestation projects. You cannot build a submarine in a quarter, you cannot build an aeroplane in a quarter. It takes 5 to 10 years to actually make a ship and to build a submarine. As a result, some of these companies have got order book which may look very attractive if you are looking at companies purely from the standpoint of order book, and which is what markets have done. But sooner than later, I think markets will realize that some of these order books will take time before they actually kick back into profitability. And these are not like 30% margin businesses. These are 20-25%. These are margins which are less than 20. These are competitive businesses. There's a commodity angle to it. So while you may say that, okay, this space has got a long way to go, but in the near term, I think looking at the valuation, looking at the business cycle, and looking at the construct, and after the recent run-up, my sense is defense stocks now at best could be market performers.
Okay, let's see which way the defense stocks head. For now, at least, they seem to be holding a buzz. But it's actually crude, talking about commodity prices. Saudi Arabia, remember, has raised crude prices. They lifted all July crude prices for Asia after the recent output cut by OPEC+. Aramco has set the Arab Light crude for July at $3 to a barrel for Asia, and they've lifted all July oil prices for US, Europe as well after the output cut. So WTI crude is now currently hovering around the $72 levels. Brent is now quoting around 76. And that, I think, seems to be the only uncertainty, right? This volatility which comes time and again when it comes to crude prices.
Why is the volatility coming in? It's not largely because the demand has gone higher. It's because you're constraining the supply. Yeah. You're constraining the supply when the OPEC members and the non-OPEC members, they know that the demand is going to be less. And bear in mind that they're cutting oil production at a time when the US driving summer season is about to start. Now, there are 2 points where the oil demand, because of the nature of the nature of the season or cyclicality, they always higher just at the onset of the winter and just at the onset of the summer driving season in US. The fact that they've cut production twice already in this year and crude prices have still not gone anywhere, I think that just tells you that which way directionally the crude demand is headed. I think crude was a worry last year. It was a big concern when crude went closer to $120, $130. But I think that's no longer the challenge now. Demand from China has not been strong. US definitely is slowing down. The energy crisis which had hit the world after the COVID, after the war, I think that clearly is behind us. While we may argue and say that you want to settle at crude ideally should be between 55 to 65, I don't think we are headed there. In terms of macro, the Reserve Bank of India assumptions, both in terms of what they are assuming for growth, the crude assumption is closer to $90, is closer to $90, and crude is nowhere close to what the Reserve Bank of India assumptions are, which means that really becomes a buffer, and that really is going to be adding back when they are going to be considering the credit policy later this week. So what's happening in the crude market? Yes, volatility, yes, news driven, but directionally, the move by the OPEC and the non-OPEC members and the comments which are coming by international experts, they're clearly pointing that the natural direction for crude is headed lower rather than headed up.
Okay, that's the view coming in on the entire commodity